There we go. So once again, my name is Lionheart Doyle. I am your trading instructor for the day. We're going to go ahead and get started. For those who don't know, we are trading foreign exchange. If you're not familiar with foreign exchange, this is going to be an introduction. Today, we're going to talk about how to enter the market properly. And I want you guys to understand that, trading is clearly something, it takes a while to learn. Don't be overwhelmed by what you're seeing. Just try to understand that there's a meaning to the madness, that won't be madness later on. So I teach classes Monday, Wednesday, Friday from 7 p.m. to 8 p.m. And if you guys need anything from me in between time, I have guides, I have literature, I have things that you can read to catch up on the markets and for you to just be more in tune with what's going on in the foreign exchange markets. Then we also have a course for you as well, too. If you are not a student currently, that's what you can look forward to on top of trade coaching as well and mentorship. You guys have my phone number. You can always call me and ask me questions before you place trades, or you can trade with me live. This session, like I said, we're going to be going over how to enter the market. We're going to go over a few terms for you guys to understand, just to get a general basis and a foundation for trading current exchange. But don't put too much weight on the word foreign exchange. You're literally just building equity. That's all we're doing as investors. That's all we're doing as traders. I'm a day-to-day trader, and I'm a discretionary price action trader. So if you guys have pen, paper handy available, this is that time to grab that out. If you guys have anyone else that needs this knowledge, I'm gonna give you guys a few more moments, but I'm gonna go ahead and get into the class. But if you guys have a few more moments to share with someone else, just this is that time. But in a nutshell, today we're just gonna go over how indicators work. We're gonna ask a few questions because there's a huge psychology piece to trading, and that's one of the parts I really want you guys to kind of harp on first while you're going through your education phase of learning how to trade in the foreign exchange markets. But this is all due to the fact that you have to be able to control your emotions before you enter a trade, and it's super important. I know Mariah was making fun of me the other day because of my tone and keeping a monotone voice in while she had called me after or during a trading session, and it's because you got to remove all emotion before you get into these markets. So that's I'm gonna talk about that a little bit as well too. So the first 30 minutes of this class, which we're already in 11 of it, we're gonna go for training. I'm gonna give 15 minutes for questions, anything, and then afterwards we're gonna do some live trading, and hopefully the things that we talked about I can go ahead and apply directly in front of you guys, because I know a lot of people are very hands-on when it comes to how do you actually trade in the markets. I don't want you guys just taking notes and not actually being able to perform. You got to get off the bench at some point and take a shot. So that's where we're at with it. So first thing I want you guys to kind of really think about before we even enter the markets is doing a self check-in. I think it's very important that you understand where your state is, your mental state, before you get into the market. One of the things that I like to do is I like to check in with myself mentally, spiritually, and physically. How am I feeling? Do I have a stomach ache? Do I have a headache? How's my heart space? Like that, all that stuff matters, because if you come into these markets and you just got out of traffic and you're all raveled up, and you just had your boss was yelling at you, whatever it is, that's something that you want to take into account before you just hop in these markets and end up placing a flagrant trade, and now you're losing money. Because I want you guys to understand that's exactly what we're talking about. We're talking about losing and making money. If you guys have any questions along the way, anything that I say or need me to repeat anything, feel free to let me know. I know I talk kind of fast sometimes. All right. So ask yourself, how are you feeling mentally, spiritually, physically? Go through that process. And then also, you need to understand, what do you need for yourself to center yourself so that you can make your next best trade? Like I said, there's a huge psychology piece to trading, and getting that down first is just as fundamental as learning what an indicator is, or what a exponential moving average is, or what a trend line is, okay? And so those are all different things that you need to kind of take into effect. Trading has changed my life personally, just on how I view life. You'd be surprised how much trading has to do with real life, and how similar it is, and the things that you can learn from the market that you can currently apply to your life. And that's one of the things that I really love about trading. It's literally, you're peeking into yourself every single time you enter the market, and it's a beautiful feeling when you can go inside and come back out with a reward. So that's where I'm at with it. All right, so like I said, one of the things you want to take into account is, how do you center yourself so that you can make the next best trade. Outside of that, a few terms to understand. The main two terms I want you guys to focus on today, and you should definitely write this one down: area of confluence. Area of confluence. And the other one is signal. Now, areas of confluence, I'm going to kind of explain. I know you're just looking at charts, numbers. If you're looking at my screen right now, it's a whole bunch of squiggly lines. It's a whole bunch of numbers going on. Let me minimize these. There's a whole bunch of squiggly lines going on, a whole bunch of numbers around. I want you guys to focus on one thing and one thing only whenever you enter the market, and that's this price right here. Out of everything on here that makes sense of anything, it's this price right here. And if you know where price is in any market, that's where you want to be started. You don't want to be starting trying to get your trend line. You want to know where price is and understand what goes on. So today, what we're going to talk about mainly is how we enter the market, right? And we're going to do that first by seeing what happened in the market today. So for anyone who doesn't know, I know a few, I think Days on here knows, but I trade gold specifically. Gold, US dollar, gold, Australian dollar, and gold euro, European euro, right? And so every day I get into the market, I want to know what went on before I entered the market. Now, if you were on my Sunday class and you went over the Sunday chart markups with me, you know that we were on the week time frame, meaning that I know I went over candles in that class, but these are candlesticks is what we're looking at. And all these candlesticks represent price. All these candlesticks are currently at a 1 hour time frame. So meaning that each of these candles is the equivalent in the price of 1 hour. All right. Any questions about that? All right. Let me know or write in the comment section. But hold on, I got the comment section popped up. Just unmute yourself because I'm sharing my screen and I can't see the comment section. So, and yep. You got
Well,
questions?
I did have a question about the candlesticks. As far as the little line, I know what the candlestick represents, but that little line I couldn't grab what the little lines on top and above it actually means.
Okay. Yep. Great
The
question.
wick.
Yep, the wick, exactly. Yep. The wick represents basically rejection, price rejection. So anytime you're at the brokerage, just imagine Wall Street going on and you're on the New York Stock Exchange. And in a nutshell, there's millions of dollars being fluctuated at any given second, right? Trillions of dollars. And there's a whole bunch of people yelling, giving orders. Now, when orders are being taken, they're saying buy, buy, buy. They're saying sell, 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 right? Buy limit, sell limit, all the different orders that you can place on a trade, right? And what that is when people go buy, 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 and all of a sudden there's a whole bunch of buy orders all at once. All that means is if we're at 26, if you look at the screen, if you're at 26.94 and all of a sudden it shoots up to 27.15, all of a sudden you're going to see a huge wick, and that represents price rejection going back down. So that means price went there as it is doing now. If you look at this candle that I have my cursor on, this represents price coming down and then basically shooting back up, meaning that price was rejected at that price. So they didn't want to go in at 26.92. It went back up to 26.94, and the candle is currently still going. So that's what that wick it represents. It represents rejection of price. Anytime you go buy, 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 too much buying going on, too much bullish interaction, then it's going to start to counter itself, and you're going to end up having rejection from the sellers who are trying to make the market go the other way. Does that make sense? In a long-rounded question. All right. So in a nutshell, area of confluence. But first, before we get into that, we're going to go over what happened today in the market. So I was trading this morning from 8 a.m. to 10 a.m. And in a nutshell, gold had a few bumps up from last night. I think we were closer to like 2670, 2672 area, and it jumped up to 2780 or
I said
2685 overnight.
I seen it at 28 last night.
Yep. Well, uh, not 2800. No, I didn't hit 2800.
And so
It was at 2675, and then you see where it's at right
highest I
now.
seen. Hold on.
Mhm.
Okay.
Right. So it was the highest. It's at on a high right now. 2697 is the highest it's been of the day, and you can tell that.
Oh yeah. It was at
Yep.
2680 something.
Right. Exactly.
2680
Yep. So
something.
yeah,
All
it
right.
jumped up from 2680, and from 2680, it kind of took off. So looking at how it took off, it was incremental overnight, and then once the markets opened at 8 a.m., the market started having a lot more volatility. That's a word that you want to be aware of, volatility. And that volatility caused it to basically jump up and then cause rejection to spike down. So we hit rejection right here at 26.95, which also happened on the 13 back here. If you can see that same rejected area. So this is a retest, meaning that the price came back and retested, and then now it came down here. That's where I got that trend line, right? You see the trend line happening? It followed the trend line. And then once again, because we're in a bullish movement, meaning that everybody wants to buy right now, it caused another rejection and for price to be where it is right now at 26.97. So looking at that, all I'm seeing is that price is still in a bullish trend. So if I go out to the week, because we always start on a week time frame when we're looking at trading view, we always start on a week time frame, and we're breaking down at what is currently happening. And when you have the week time frame versus the month time frame versus a year time frame, you get a bigger perspective of what the current prices are, or what the current prices have been, rather, right? And so the same way, when you start to learn how to read the candlesticks properly, once again, these are candlesticks. There's a candlestick guide that I can send you once you give me your email, Ian. I know for you, I know you need it. Shoot me your email, I'll get it to you. Mariah, if you need it, let me know. I can send that to you. But it's basically how to read these candlesticks properly so that you can see certain signs and signals, because all these candlesticks mean certain things. This candlestick that we're currently on within this week is telling me that price went all the way down to started at 26.51 and now it's at 26.97, meaning it's almost up for about 4,000 pips, I want to say, right? So gold is on an uptrend, and that's what we're gonna talk about as these last 9 minutes of me telling you how to enter the market, because you want to know what happened the day before, you want to know what happened a few hours before, and you want to be getting a current temperature of where price is at and how it got there. Because if you get into a trade and you think it's going to buy, it might be coming towards resistance and then it goes down. So if you get in for a buy and then you hit resistance immediately, now you don't get to capitalize on that market move. You might want to wait until it comes back down to support. If you watch my screen, this is this yellow line right here. That's a support area right there. So I would wait for price to come here before I got in so I could get a better price or a discounted price, right? All right. So what happened in the market today? We covered that. How do these indicators work? So when I talk about areas of confluence, we're talking about which indicators you need to have an area of confluence. And an area of confluence basically means that you see a few signs that the market is going to go a certain way, i.e. a trend line, right? I'm gonna draw another trend line here. We always do trend lines at the bar, not the wicks, at the body of the candle, not the wicks, right? Looking at support and resistance, right, is also another sign of area of confluence. So support and resistance is what we're about to try to get now. That's on the month time frame. We're gonna break down a little bit. Let's go to the hour, back to the hour, and stretch it out. Days, have you been able to navigate TradingView with how to stretch it out and all that? You familiar with that right now?
Yeah, but I just couldn't get it. Remember, I was telling you, I couldn't get it to look like that. Mine is still white.
Yep, yeah, I customize this all, man.
All right,
Uh,
all right. That's how I'm
yep,
like,
yep, I,
mine don't look like that. My candlesticks don't
yep,
look like
right.
that.
Yep, yeah, yep. And you can do the same once you get your trading view together. So the reason why I'm using yellow is because gold is telling me it's buying, and so I can automatically see certain things, because for me, once again, going back to psychology, being able to see certain colors that represent certain your favorite colors or whatever, it puts a certain dopamine in your head so that you can trade more effectively. And so that's basically what you're looking at on my end. These are all colors that to my eyes are appealing and aesthetically pleasing. So it makes me trade better for me. That it gives me that mental space. So having your own
Gotcha,
setup is very important while you're becoming a retail trader or an investor in general, when you're doing day-to-day trading.
gotcha. All right,
Yep,
makes
yep.
sense.
So yeah. So what is the next best trade to make after you find how many indicators you need? So I know I spoke about it before. You need 3 to 5 indicators. One could be support, one could be resistance, one could be an EMA, meaning an EMA, exponential moving average, which are these 4 lines right here. These are all my indicators right here. So I have an EMA at 21, 55, 100, and 200. And then I have a small moving average or a smooth moving average, right? And all that means is an EMA 200 would be the representation of the last 200 candles. And that's what that line is that you're looking at. All right. And I'm not exactly sure. I got the yellow one is the 200 EMA, I believe. But nonetheless, once price comes down to one of my EMAs, that's also a reason to get into a market. So we have support, that's 1. We have resistance, that's 2. And then we have a signal, like a certain candlestick with a lot of rejection on it, that's 3. And then we have EMA, that's 4. And then if you would like, there's a whole trading view indicator right here that says whether you should buy or sell. And that can be 5 right there for you. So now you have 5 signals to enter the market. Now you're just waiting mainly on a signal, which would be one of these candlesticks, maybe a lollipop. There's a whole bunch of different dragonflies. There's a whole bunch of different things that let you know whether the market's going to reverse, their market is undecided, or the market is going to start trending, right? And so you getting into the details of how these candlesticks are telling you certain stories, like this candlestick right here lets me know that price came down to 26.63 and got rejected, right? Came all the way back up and finally closed at 26.71, meaning that price was heading down there. And if you look at it, it's in a downwards direction, meaning that the bears were in control. Bears meaning they strike down, meaning they go in for sells. Bears are sells, bulls are buys. All right. And the way you can remember that when they talk about having a bullish market or seeing a bullish market, bulls strike up, bears strike down. All right. That's as fundamental as you can make that one. So in a nutshell, these candlesticks where we're heading in this direction, we're all going down, going down. This is a candlestick that finally has some direction, meaning that there are buyers looking to get in the current market. All right. So the buyers got in the market, pushed the price up, came back down, pushed the price up. This is all rejection. That is 3 bottoms. And that's a huge indicator that the market is going to go up. However, it didn't until 1, 2, 3, 4, 5, 6 hours later. You got me? So that's why you still need to be able to adjust and see what the market is doing. You don't want to just hop on just hop in the market just off the basis of the fact that one candlestick did something crazy. You got me? You want to have areas of confluence. That's one of the main reasons why you want to enter the market. All right. So how do indicators work? We're kind of going over that. I went over the EMA. I think we're going to leave it there for the day, and I'll teach another EMA later or a different indicator later, because I want you guys to really learn how to trade naked, meaning basically you're not using any indicators because you don't necessarily need them if you understand market structure. All right, and that's the third term that I want you to know. So we have area of confluence, we have signal, and then we have market structure. And if you look up any if you guys need a video, I will put one in the group chat. Let me know if you're not in the group chat, and I will let you guys know market structure, and I'll give you guys a video for market structure as well. All right.
Now you said area of influence.
Area of confluence.
Area of
Man, you're the
confluence.
area of influence, man. Yeah, area of confluence.
I
Uh,
get you.
yep,
What's the next?
confluence.
What's the other one? I'm just taking these notes.
CONFLUENCE, confluence, and then
No, I
signal.
got
Yep, and
signal.
then market structure. And all market structure is basically market structure. The market consolidates, meaning it comes down and gets real close. And I'll show you what that looks like real quick. So this is a consolidated market. These 1, 2, 3, 4, 5, 6 candles right here. The market consolidated, meaning it shrunk, meaning the volatility has left the market, right? That's one phase. There's expansion, which you're looking at right now, right? Expansion, right? And then there's contraction, right? Going back down. So it'll go from expansion to trending to basically coming back down in price. And that's all you're looking at all day and forever. And obviously it creeps up and creeps up and creeps up. But if you look at it, price just goes up and down all day. And that's how we make our money, in those movements, from price going up and down. All right. So the main question that I want you to always think about before you enter the market is, what is the next best trade, right? What is the next best trade? And then what indicators or areas of confluence have you to believe that? All right. So understanding support and resistance, understanding market structure, understanding the status of where the market is currently at, whether it's consolidating, because clearly we're going into a consolidation phase right now, because we just left a basically expansion phase, right? And opening up and pricing a lot more volatility. So now we're going to contraction, and it might trickle down, trickle down, trickle down, so the market can reset for the next day. You got me? So that's one of the reasons why I want you to never feel like you missed out on a trade. Never feel like your trade is going to be doomed. Market always comes back. Sometimes the market tanks. Yes, it does. But if you had proper account management and you stuck to the right lot size and you were disciplined before you entered the market, all you need to do is set your stop loss and don't worry about it. Set it and forget it. All right. Sound like one of those info commercials. Set it and forget it. All right. So I'm going to go ahead and open up the floor up for questions. If there's no questions, I'll go ahead and start trading live. But if you guys do have any questions, this is the time. And I'll try to be as specific as possible and try to relate it back to the market for basically however it can apply, whatever your question is. All right. Any
So,
questions?
yeah, so you're saying that the area of confluence, that is the thing that supports, it's the support and resistance level. Well, it's the support and resistance levels, right? The trading lines, the moving average, and more, right?
Correct. That's a great question. Yeah, so the support and resistance, all these are just signs for you to enter the market. When people compare investing to gambling, with gambling, there's not too much science. There's odds, there's probabilities, but it's the same here, except you have signs of confluence. I mean, outside of, if you know the whoever's dealing the hand personally and he winks at you or something, that would be a signal, right? So so maybe if that was set up, but that's not what we're talking about. We're talking about the markets. And so in a nutshell, areas of confluence, they're just signals, and that's all we're looking at all day. It's just the market going back and forth, areas of confluence, and just having the best probability. What is the next best trade I can place, right? And we base that off of the probability from the areas of confluence.
So when you say probability, that's basically, a lot of this has to deal with prediction then, right?
So the thing is, if you say you predict the market, that means you know what's going to happen next. And the thing is, when you're trading, when you're actually live trading, like when I get into it here in a moment, when you're actually live trading, you can't necessarily predict the market, because even as you're looking at this, there's a thing called back testing, where you have your trading plan and you have your strategy. And when you have your strategy, you look for certain signals. Before you go into the actual markets, you back test, meaning that you look at the previous things that have happened, right? The previous things that have happened, and then you use that strategy to see how it would apply, but it's in the past. So you can't necessarily say, oh, from this information, I know this will happen in the future, because there's times where your trading plan will not be exactly what happens. So it's not that you can predict it. So probability is more of, hey, if the market is done jumped up, I think we probably got to about what, 2,400 pips today in the market, and on a boost today. So meaning, if prices, let's back it up. Just let me make it a little simpler. If I have a phone that is very valuable, it goes from $1,000, and then it goes to $1,200, and then it goes to $1,800, and then it goes to $2,400. If you originally knew that this phone was $1,000, you would say it's what? Overpriced, right? And so you would know to sell this phone at that time because it was overpriced. But however, the price could keep going up. You could get more for it, but you don't know that. So you're going to sell for what you know you can get it for, because if it goes back down, you're going to be upset that you didn't get the amount of money you could have got for it. And that's all we're doing in the markets.
So after observation, everything is more so deductive reason then, instead of predictability. It's more so deductive reasoning after you understand what's going on in front of you, and piecing the puzzles to the probability, right?
Exactly. And
Okay.
and what you're commonly referring to as market structure. Once you understand market structure, is just the fact after that, now you just go wait for your signal, and you get your signal from your areas of influence, areas of confluence, and then you get your areas of confluence from your indicators. All right. And so in a nutshell, so I'm gonna break this down how if I'm just now touching a market, matter of fact, let's just go to a new market that I haven't even marked up yet. I'm gonna go to something, we'll go to Bitcoin. We'll go to Bitcoin. Bitcoin is at 100,000 right now. I haven't marked up this chart yet. So the first thing I'm gonna do, I'm gonna go to the week time frame. I'm gonna go to the week time frame. I'm gonna see what's been going on. It looks like I might have had some what's the name, some bars, some trending bars here, but I'm gonna try to get rid of those real quick. Cool. All right, now we got a naked chart out. Actually, let me take this. Let me even take this off. I want to completely. All right, so now we have a naked chart, right? And so in a nutshell, we're gonna go ahead and start drawing up support, resistance, and trend lines as well as possible, right? We want to see the sauce. We want to know what is going on in the market. So I'm gonna find the bottom of the most recent trending candles where it looks like there's some type of base or a retest, meaning that price went up, came back down and retested. And if I can find enough bodies of the candles where there's some symmetry or there's at least some that's one angle right there. I can look at it like that. And then I'm going to continue to cut up the market to see where support and resistance, And the way you do that is by finding you want at least 3 to 4 touching points of retest. And all that means is I'm trying to find 1 here, 2 here, and 3 here. There's a touch here. So there's a touch here with a wick, but not a body, right? On this candle right here, there's a touching point on a wick, but not a body, right? You guys see that? And I don't like to use the wicks, but if that's what you have, but then also what we have right here, if you stretch it out a little further, is another area. So now we have, give me 1 second. Let me do some artwork. So now we have 1, 2, 3 areas of retesting. And if you want to, you can call this one as well too. So that's 4. So that's how I'm drawing my support right now, right? So at a bare minimum, I'm chalking this up as it's in an uptrend right now, because clearly you can see that price is going what? Up, 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 up. But you got to know when to get in. Outside of knowing that the first thing, whether the market is going up and down, whether the market is bullish or bearish. If the market is bullish, you want to see how bullish it is, which it is very bullish right now, because we all know Bitcoin just took a jump. And then I'm going to find some resistance. So what I'm believing is going to happen, give me 1 second. And I'm going to try to find some more retesting areas, right? So I'm going to go back to my highlighter. So we got 1 area here. We got another area here. We got another area here. And if you want to call this one, it's another area that you can say price retested, right? Before it broke market structure and started going into an uptrend, right? Before it started doing that, it was going up and down. And you can call that a consolidated phase, in a kind of, sort of, because it stayed in a general area. Now, it was just a lot more volatility, but it was volatile. There was money to be made right here. There was a lot of money to be made right here from the prices going up and down. So now that we're trending, what I'm saying is going to happen is price is going to come down right back down here to about 72,000 some point in time. This is on the week time frame, mind you, so it might be a few weeks. Price is going to come back down to 72,000, and then that would be a good time to get in. So I'm going to draw a signal real quick. Once again, because if you're in my trading class or my group chat, I give signals. So if I'm doing an entry price for Bitcoin, I'm going to say Bitcoin at some point in time going to come back down to 72,000 area, but 70. So it might be from like 68,000. We'll just call it 60. I'm going to give a general area because I don't want to say, oh yeah, y'all gonna be like, your Lionheart said it was 72,000, went down to 69. Lionheart don't know what he's talking about. Goodness gracious. So 68,000, 72,000 area, right? And then it's going to have this, what was resistance is now support, because when it comes back down here, it'll be retesting at that 72,000 area, right? The smiley face there. It's going to be retesting around this area, or whenever it comes back down to this, what is currently, or what it was resistance, will now act as support. And then it's going to do the same exact thing that it's doing right here. Does that make sense? Any questions on that at all?
Nah, you good.
Cool. All right. So in a nutshell, and if any of that, clearly I'm talking fast, but clearly if there's any questions along the way, just let me know. But what you all want to think about is support and resistance, where the price is currently at, where the price is currently going, and how you can make money off of that, right? And from here, like I said, 72,000, I would put my stop loss 1 ATR, meaning you see these little blocks in the background. Each of those is an ATR, an average true range. And we're going to do 1 ATR past the lowest. So let's get another shape in here. 1 ATR past the lowest, the support point, the entry point. And that's how you set your stop loss. So Days, I know you're a little bit more further down the line, but when you set your stop loss, that's what you want to be thinking about, that ATR.
All right. So I had to just write down the exact term, that ATR.
Yep. I'm gonna mark this up real quick. So yep, average true range. 1 second. Oh Lord. And then I'm gonna start trading here in a second to give you guys firsthand experience of what to expect when you are in the markets. All right. So if this is my entry right here, we're support, or we'll just put it right next to the smiley face. We want price to come back down there. And before we get into the market, we're looking at areas of confluence, what the market is currently doing. And we're trying to find the last thing is a signal, right? That signal. So if this candlestick does something like that here and it closes exactly like this, that would be a signal. That's a lollipop right there. You see how it's fat at the bottom, right? All the body at the top and the wick at the bottom, all the skinny at the bottom. It's a lollipop, right? And that's what we would be looking for right here to let us know that it's going to go up into a trending phase. All right. So entry right here. We'll do stop loss 1 ATR below. Let's stretch this out. ATR. Stop loss. And we're going to put that from right here. We're going to put that color red. So, bam. So because that is the amount that we're willing to lose, right? The stop loss. So for those who don't know what a stop loss is, all a stop loss is where you have hit your risk tolerance and you want to make sure that you don't lose no more money than what you're willing to lose for any one trade. You will set a stop loss for every trade until you understand more about the market and how to kind of do some scalping or something of that nature. You're going to set a stop loss just for good training and good disciplines while you're in your demo accounts. All right. So 1 ATR stop loss, which would be right here. My entry is right here. Right. And I'm as you see, I just lowered where the resistance is, but it's still in that same area, but it's touching more of the candles. And basically the more touches, the better confirmation that you have that it's good support. Because what ends up happening is the same way that it was support on the way up, it'll be resistance on the way down, or vice versa. You got me? All right, so 1 ATR, we're going to do a stop loss. So if my stop loss is here, that's at 60,000. Stop loss 60,000. So clearly, if Bitcoin comes down to 72,000, you need to be looking at that 68, 72,000 area, and your risk would be about 8,000 pips, right? or whatever that is in the exchange. I really don't mess with Bitcoin like that. I'm just kind of literally letting you guys know. I do, but I don't. I'll say like that. I'm not huge on crypto. It's like an extra risk on top of how risky investing can already be. It's a very volatile instrument, but clearly people are making money in it. I've made money in it, but nonetheless, why have the extra risk? It just doesn't make sense to me. All right, so stop loss 60,000. And then now when we're looking at how much our profits are going to be, our TPs, our take profits, right? Take profits. Now we're looking at that. We want to have ideally a 1-to-4 ratio. So what that looks like is if you're risking $10 and you want to have a 4-to-1 ratio, right? A 4-to-1 ratio, that means you're looking to profit $40. You got me? And it's the same thing in this market. So if I'm willing to risk, if my entry is 72,000 and I'm willing to risk all the way to 60,000, that's about 12,000. So that means I need to have my take profit 3 times that. And what you're gonna ideally see, because it's gonna make a lot more sense. I'm gonna turn this line green where I want my take profit. Where is this at? This is about 108,000. And if you know it, if you guys been following Bitcoin, I think it got up to a high of about 108,000, 109,000 area, right? So that makes perfect sense. And it would definitely, huh?
You talking about in general or right now?
No. It went up there when it first started kind of going on that boost. It hit about 108,000. So let me see. I can give you guys the exact. Yeah, 108,000. Yep. And as you
Is
guys,
that right now?
huh?
Is that 108,000 right now?
No. It's at 99,000. You see my screen right now? This is the price of Bitcoin on trading. You see it?
Yeah, I see it. 99,
Yeah, we got 99. So it's heading back there. But ideally, the ideal price to get in for a 4-to-1 trade is you would get in at 72,000 and you would ride that thing up to about 108,000, because that's where we know it's been there before, meaning it's going to retest there, and it looks like it's probably going to retest there soon, but it's going to start to have resistance there for a few times. I guarantee you Bitcoin is going to hit about 110, 109, 108,000. If it goes above 108,000 and it doesn't come back down directly, then we might have a trend. But if it doesn't do that, then I'm telling you it's going to go back up and down, back up and down, back up and down. You got me? And then ideally you want to wait until the market gets shocked, because what's going to happen at 72,000 is people are going to be like, oh snap, it's crazy. Bitcoin just went on a discount, right? Not, oh no, Bitcoin went down, we got to sell our Bitcoin. That's the wrong mentality. When there's blood in the market, that's the time to buy, right? I want to say that's from Warren Buffett. But when you see all the red and all the selling goes down, it's going to come down to 72,000, and it's going to happen quick. And that's when you're going to see everybody get in the market. And then that's when it's going to ride back up to at least 108, 108,000. You got me? And that's what you're going to expect for over these next few weeks. And that's where you're going to look for your opportunities. And I'm not saying that Bitcoin isn't going to go up to 116,000, but I'm telling you it's going to come back down at some point in time to that 62. And to be honest with you, it's around that 68, 72,000 area that I would be looking for to enter a trade. All right, so we're gonna do a take profit, and I'm gonna leave this here, and we'll come back to it probably in like I'm not predicting. That's the thing you don't know. So when Monster, to answer your question again, to predict the market, I don't know when that's gonna happen. So you can't ever actually predict it, if that makes sense. You know it's gonna happen, you just don't know when. And technically anybody can say that, right? So you can't necessarily predict the market. You're not supposed to be wrong or right in your trading method. What you're supposed to do is make a trade and then find the next best position. And I'm going to show you guys how to do that here in a second. So I'm going to spend this last 10 minutes trading for you guys. Hold on. Let me finish up this note. Give me 1 second. Finish up this note. Where was I at? Take profit, right? Take profit, 108,000. Get to the money. Get to the money. All right. No money in here. I'm gonna. Nope. All right. All good. We're just gonna say check mark. There we go. Bam. That's what we're looking for right there. 108 from 72,000. And ideally, what I also want to let you guys know is when you're setting your stop loss, You want to do that with a lot size of 0.01 if you're a beginner. But if you do know what trading is, and when you do get to bigger bags, I'll say it like that, you want to make sure that your stop loss is still within your account management size. So meaning every trade, I personally risk about 1 to 5%. I'm a little bit more of an experienced trader, but starting off, you want to only risk about 1 to 3% of your account total. All right. All right, getting into the market. So I'm gonna see if I can place a valuable trade for you guys. I'm gonna start off and keep it very 1,000 for you guys. So 26.96 is where we're at currently. I'm gonna look at the market. So I'm gonna go back to gold and see what the market is currently doing. My ideal price to get in is 26.56. No, that's on the week. So we're gonna go break it down to an hour. Let me stretch this out. We're gonna break it down to an hour, and that's so crazy how those are the same same trend lines, right? Same trend lines on a different time frame. All right. So now that we stretched out the market, I'm gonna find tops and I'm gonna find bottoms. And just so you guys know, there's plenty of literature as well, even outside of learning how to read candlesticks on Forex as well. And once again, we do have the course available for you, the foreign exchange course through Baby Pips. So that's something that you free to me, free to you, free to everyone, so that you can further educate yourself on how to properly think about the markets and express yourself in the markets, because you want to know what's going on. All right, so tops, bottoms. Try to even this out a little bit. Drag this down. And like I said, you want the bodies to touch, not the wicks, the bodies. All right. So, and then I'm going to find one more bottom. So I'm basically just setting up areas. And then I'm also going to, on TradingView, you can set alarms for when, so let's say you're out and about and you're still trying to make a trade, you can set alarms for when price gets somewhere. So don't think you got to monitor the markets this whole time. That's what I want you guys to understand about making money in these markets. You don't have to, just be looking at the markets all day. Literally, you can be in the market 15 minutes and make some trades. And as long as you hit your pip goal, how many pips you wanted for the day, you can be in and out the market in 15 minutes. So basically what I'm doing right now, number one, I'm waiting on price to get down to somewhere or up to somewhere where I feel comfortable getting in for a trade. But clearly, gold is at a high, right? Gold is at a high right now. So in all honesty, gold's probably you see it's hitting some rejection, right? It's hitting rejection. It also hit rejection there. That looks like January 10th as well, 3 days ago in the same area. So what I'm looking to do now is to get in for a sell, right? So I'm gonna go ahead and get in for a sell. Bam, bam, bam. I'm gonna hit that thing 3 times. We're just gonna see that thing rock out for a second. I want you guys, this is the broker through a liquid broker. And in a nutshell, sorry, got a phone call. But in a nutshell, this is a liquid broker. This is the broker that we use here at Lions Wall Street currently. If anything changes or updates, I'll always keep you guys changed and updated as well too. We're Lions Wall Street. We move as a pride, like, but nonetheless, net profit.
So you're doing an actual trade right now?
Yes, these are live trades right now.
All right.
So these, in a nutshell, these are directly off the market. I'm gonna break this down for you. This is your first time seeing. I know I broke it down this Sunday, but we have the trade ID, we have the market, right? Which market we're in, which is gold XAU versus the US dollar. We have an action, which is selling. We're selling currently. Lot size, net profit, pips, meaning the different pips is the movement that you're looking at in your trade, right? Open price, SL, stop loss, TP, take profit, the current price, You can also set expiry. Let's say you want to give it a whole day. You know you're going to be traveling. You can set an expiry. So if I want to say 12 o'clock tomorrow, I just want my trades to close out. I don't care where they're at. I just want them to close out at 12 o'clock tomorrow. Or if you were on a more tangible level, I would say, hey, let me close these out 7 o'clock before a whole bunch of volatility happens. And if I'm profitable, then I don't want to lose any more money, or I'm okay with the market going without me. And so you would set your expiry for about 7:30 before the market's open. You see what I'm saying? Something like that. Your current profit, your commission that the broker takes, the open time, the loss potential, and the profit potential. So now that I just got into those trades, I'm going to start setting some take profits and some stop losses. And then I'll show you what that looks like on the charts. And then we're going to go ahead and call it a night, Queens and Kings. Okay, and then so 26.96. If I'm doing a scalp and I'm just looking for a 1-to-1, meaning a 1-to-1 ratio, win-lose ratio, then I'm gonna do 1 ATR. If I would do it 1 ATR for my stop loss, 1 ATR for my take profit. You got me? That's a 1-to-1 if I'm looking for a quick scalp. And that would basically be me getting in at 26.97 or as close as possible, and me getting out at 26.93. Now, if I'm holding this long term like I should, because I see that the market is overpriced, and I'm saying that because the retest over here, we have the huge boost over the past Monday, Wednesday, Friday. I mean, Monday, Tuesday, Wednesday. And just so you guys know, the market is infamous for Friday sell-off and Thursday sell-offs. All right. So that's just kind of what happens, because the market has to go back into market structure, and what it goes up must come down. You got me? So basically from here, 26.96, 26.97, I would be looking to kind of take advantage of this area right here. I would like it to see a breakthrough, this any type of support right here in this area, and I would like to see it come down here to about 26.79, and that's about 1, 2, 3, 4 ATR. So that would still fit our 1-to-4 ratio, and I'm going to show you guys what that looks like here in a moment. Because first I'm going to set all these stop losses. Wait, let me go back. So we're going to set our stop loss entry here. Stop loss. Take profit. All right, so entry here, which is where we just got in at 26, right? 26.96 something around there, 26.96 area. Stop loss 1 ATR. My rectangle. Above the entry. Right, which is what's going on? Which is 26.99. That is extremely tight. We're gonna do 27.03. So we're gonna do 2 ATRs on this one. And let me back up a second, because I forgot this was like the very first class. Later on, when I show you guys strategies, you're gonna actually have your ATR one away. I just wanted to give you guys the method. I forgot to tell you that, the methodology of how to use an ATR. But you want to have your ATR later on when we're in advanced classes, 1 ATR below where your trade is invalidated, meaning where you see, okay, clearly this trade is wrong. You want to have your ATR 1 below that. That's where an ATR is actually supposed to be placed. But for this purposes, I'm just trying to give you guys the learning principles for instruction purposes only. You got me? So we're gonna say 27.03 would be a valid trade on this one. A valid stop loss on this one. 27.03. Right? Stop loss 27.03. I'm gonna go ahead and apply that to all my trades now. 27.03. 27.03. 27.03. All right, now we're gonna look for our take profits. And so ideally, here's the reason why I opened up 3 trades. whenever I get a signal, I'm normally going to give you 3 take profits. Whenever I give a signal, I give you 3 take profits, right? And so we're going to do take profit 1, take profit 2, and take profit 3. So we're going to do take profit 1, which would be the first area of resistance, right? Or I'm sorry, support where basically the market stops. Where when I'm talking about resistance, I mean basically where the market is starting to slow down and see where price is at. That's one area that you can take profits from, right? And that would be at 26.90. And keep in mind, I'm keeping it very tight for you guys. Keeping it very tight for you guys. Because you can stretch these out and go much wider. But in gold, you don't need to go too wide. Market doesn't need to move a lot for you guys to make money. So, oh, my bad. For take profit, 26.90. And we're gonna hop off. Take profit 2. Take profit 3. All right, so 2, I'm looking at the next area. Oh, looking at the next area. 26.90. The next area of where I see a lot of tops and bottoms or some resistance would be here, right here, 26.84. So that would be take profit number 2. Just looking at these prices. $26.82. And then lastly, and if there's any questions, this is the time to ask. Just looking at these markets. Seeing if we got some motion over there. And then lastly, 20, I would say about right here is 26.76. I'm gonna move this line to green. Change this color to green. This is where we'd be looking to exit around this area because there's multiple areas of retesting. Honestly, we could take it all the way down here to 26.58. You definitely could, because it's headed down there. But in this market, you want to get in and get out because you don't know what's going to happen. The longer you're in the market, the longer you're risking your equity. All right. So coming all the way down, and we'll say 26.77. 26.77. All right. 26.77. All right. So that would be the signal that I would give you guys right here. So I'm gonna put one of these. This is how when I give you a signal, this is how you can do it, or you can put them all at 26.77. So I'm gonna just put the bottom one at 26.77. And then, but you can do that for all 3. Depends on how you want to set up your trading pattern. Once you understand, if you just want some money, is one thing, or if you want to hold on to a short-term trade, a mid-term trade, and then a long-term trade. So it just depends on once you start learning how to work these markets. That's how you can basically start to systemize your trading plan. All right. And then I believe we said 26.82. And I know I'm a minute over, about to head off. And then we said take profit was 27.90, 26.90, 26.90, 26.90. 690. All right. So we got that's what it looks like real time of when you get signals. This is what a trade looks like when you get signals and you plug them in. This is what they should look like. They should have stop losses. They should have take profits. You got me? So what we are experiencing right now is called drawdown. For any trade, you're going to have a little bit of drawdown, and that's what your stop loss is for. All right. So when you see you're negative, don't freak out. It's part of the process. You are going to lose trades. I'm going to let you know that right now. If you think you're going to come into the school and not lose a trade, that's not what's going to go on. You're going to lose trades. It's part of the process. What you want to focus on is losing small and winning big. Out of every 10 trades that hit your trading pattern or hit your trading plan or you use your strategy and it hits, that's all you want. That's all you want. All right. You don't have to go too deep into the drawdown factor more than what your stop loss is. And don't keep changing your stop loss. All right. Don't keep editing and modifying. Let your stop loss be. Let your trade run. If it's a winning trade, it's a winning trade. If it's a loser, it's a loser. Out of every 10, all you really need is about 4 or 5 to hit that 1-to-4 ratio to be a profitable trader. You don't need to be, you can have a 40% winning rate and still be profitable. All right. I want you guys to understand that. Any questions? All right, for sure. Outside of that, give me a call if you guys need anything. I'm here for you. I will be back on class Wednesday. I have a marketing meeting here in a moment. 3 minutes late, but ain't nobody show up yet. Well, I mean, half the team already here, so it's all good. But I appreciate you guys. Once again, my name is Lionheart Doyle. I am your trading instructor. If you guys have any questions, you can email me at info@lionheartmotivationfactory.com. Our hotline is 833-563-4763. And then you can also, if you know me personally, shoot me a text or a phone call if you have any other questions while you're trading, or if you need help setting up a demo account, or you need more literature. But I appreciate you guys. You have a good night.
Perfect. Gotcha.
Oh, I see some stuff in the trading. Okay, yep, sure. All right, yeah, no problem, Raya. Yep. Be safe, Ian. Y'all take care. All right. Whew. How y'all feeling, man?
Should be good, man. Good. Stuff it is overwhelming, but I know it takes
Yep.
time.
Yep.
I ain't rushing the process.
Exactly, and you shouldn't. You shouldn't. Let me stop share. Stop recording. Oh, snap, didn't mean to do that. Hold on. Do I know how to stop recording? Yes, I do. All right. Stop recording.